Welcome to episode 1 of ICT 2022 Mentorship series. In the first episode, ICT talks about buy side and sell side liquidity. So, firstly, we will talk about buy side liquidity. Above highs, there is buy side liquidity. Why? Because there are buy stops above highs, and vice versa for sell side liquidity. Below lows there is sell side liquidity, and because there are sell stops mean there are stop losses of people or institutions. Like if we are watching higher time frame, then there are stop losses of institutions there. So we will talk about later in our videos, but firstly understand this concept. Now I am on 15-minute time frame. See, this is a high. There is buy side liquidity. You can see this is a 15-minute time frame, and the market took this liquidity, taking this liquidity because it was all-time high, and it moved down, giving us a strong market structure shift. But here we will talk about sell side liquidity. When the market is coming down, we can expect it how far it can come down towards this sell side liquidity. This is buy side and this is sell side liquidities. There are buy stops, these are equal lows. When there are equal lows or highs, is very much interested in taking these lows or highs. Firstly, you before using this concept in your trading, you have to understand top down analysis. Now you know something about buy side and sell side liquidity. Like if I am using 15-minute time frame for marking buy side and sell side liquidity, I will move down to 1 minute. Market took this liquidity, this level. Like when the market was going up, from where we can expect the market is going up. See here, the market structure have shifted. Market moved down into retracement, giving us an opportunity. Like I don't want to add more things so that you become confused, but this is equilibrium 0.5 level, and below it discount, and we will only want to buy from discount, and we want to sell from premium, like above 0.5 if premium. So you can see, if we take a trade at this point and place our stop loss here, and then we can target our, this is how you use this concept. Like for different time frames there are different levels. Like if I am using 4 hour, I'll mark my liquidity on with respect to the 4 hour time frame, but I'll take entry on 5-minute time frame. This is 4 hour time frame, and the market has took this buy side liquidity, and after taking this buy side liquidity, market gave us an opportunity towards, after taking buy side, the market moved towards sell side. If you see you in the next episode.